long ago, in a galaxy far, far away.
Nah, just kidding. But a pretty long time ago, the year 1666 to be exact, the distinguished 23-year-old scientist Sir Isaac Newton discovered the laws of matter. The first one being, objects in motion tend to stay in motion unless acted upon by an outside force. This can be seen in most aspects of life. Example, fire's going to continue to be hot. Steph is going to keep hitting half-court shots. So today's mission is to learn how to identify trends. We're going to use that universal law and apply it towards stock markets. Let's begin. Analyzing the overall direction of a trend is pretty intuitive to do. So when looking at a graph, there are two things that are very, very important. We're looking at the peaks as well as the valleys. So let's define those two terms. A peak is the highest point that the price of the stock touches before it changes direction and starts heading back down. Now the inverse of that, the valley, is the lowest point that a stock's price touches before it starts heading back up. And we can use those points on the chart to graph the overall trend. So what we do with those points, you take all the peaks, draw a line in between them, and then we take all the valleys and draw a line in between those. So let's do a quick example. So, if you're looking at this stock right here, we see that the peaks get higher, the valleys get lower. So even though the camera's having a hard time focusing, you can see that the line is overall heading up. And on the inverse, when looking at this stock with Nokia, over the time period, the peaks get lower, the valleys get lower, which indicate that overall, this price is going down. Here's why you should care. You invest in different ways depending on the market. If the market is overall just going up, you can genuinely just throw money at anything and hold it because, well, it's going up. Everything's gonna make you money. But on the other side, you can still make money when the market's going down. You just have to recognize where these points. So going back to that Nokia example, as we can see, yes, the price is overall going down, but they have these little bumps that are like this. So even though it keeps getting lower, there's still a couple spikes, and that's where your opportunity to make money is. And to find these spikes, it's what's called support and resistance lines. We're going to cover more of that in the next video. It's a lot easier to go with the market than to try to go against it. A good analogy would be surfing. Good luck fighting a 15-foot wave. It's a lot more likely that you'll get somewhere if you ride that wave. I just want to thank everybody for sticking through the long video. I really want to apologize for the amount of time since the last upload. I dropped and broke my camera about a month and a half ago. Finally got it fixed from the repair service. It took a long time. I got it back, it was still broken, sent it in again. It was a very long turnaround time, but it's okay. We're back now. I'm gonna take care of this camera and I'm trying to have another video within the next 2 to 3 days. So I'll catch you in the next one. Peace.